Alright guys, I want to do a video on, I'll do a little bit of pattern trading, sort of in isolation, and we'll add some levels trading in isolation, and then we'll try to combine the two together. So, turn these on, we'll get back to the indicators we were using earlier. We have the RSI, we get the VPR off, volume, and our EMA ribbon that we designed earlier. Now, if you haven't updated your EMA ribbon, or if you want to use mine, or if you're using your own, that's fine too. These are the settings I use on my moving average ribbon, and I have it set to all EMAs, the 13, the 50, the 800, and the 200. And then I went and added another EMA, and I adjusted that one. I think it comes default at 9. I adjusted that one to a 5, and I just made it yellow. So that approximates all the EMAs I use. And when we do patterns trading, I'll go over some of why I added the 5 in there and some of its use, especially if you're using the moving averages as a standalone system of support and resistance. So I've gone over before some of the patterns that I use, and it's really only the two patterns. Let's draw them out a little bit. I do M patterns. Okay, like that. Yeah, and W's, essentially the same thing, just the other direction. I don't see any good W's on this chart right now. And I do continuation patterns. So, well, M patterns and W patterns are reversal patterns, and then these kind of weird Z shape, that's our continuation pattern. Let me change these from dots to a line, make it easier to see. Yeah, so that's our continuation pattern. And I didn't draw them right on top of the motion, we're just so you can see the pattern better. But if I were in this, this is H bar, if I were in H bar, which I am, and we're looking for patterns on the 1 hour time frame, the first thing I see here is we just came off of a nice M pattern. We broke over the 50, the 200, and the 800. So on the 1 hour time frame, we're looking pretty bullish. The EMAs are starting to cross. So we head back down, and you see the 50 here crossed over the 200, and more importantly the 800. But what didn't happen is the 200 never got over the 800. And you want them to cross in numbers like that, you know, the 13, 50, 200, 800. And to stay bullish, the 200 would have had to pull over the 800, and the 50 would have to stay over the other two, and they would spread out. Unfortunately, if you're a bull, came back down and hit the 800 through the came back down through the 50, hit the 800, and tried again to come back up. It usually does that. It's kind of a fake rally before it comes back down to the downside. So we have this M pattern. Let's mark that one off because it's pretty complete. And we'll mark the tips there and the bottom tip here. So what we can do to trade that pattern, if we saw it developing, let's say we got here, came down, hit the 800, came back up. Well, if we were looking for a continuation pattern, you know, we'd be looking to break through here, and we did wick through it. So you may have been tempted to go along here. RSI even looks good, but what we're lacking is volume. So not a lot of volume kicking in at this point. So if you went long here, halfway down, like that, and this is the halfway point, this would have been just below here, would have been your stop loss, and came back down to the 50, stopped out. If you tried to go in early, as a rejection of the 800, your stop loss would likely be under the next EMA, which would be this 200 here. In which case, you'd have entered here, you'd come up, and come back down. And if you didn't get out here at halfway, or if you didn't get out here as we broke the 50 EMA back to the 800. You know, tapped the 800 again, came back up, failed to break the 50. At this point, I'd have definitely thought about getting out of that long because we're curling down, we're forming bearish structure. I'll get all this mess on here. Let me clean that up a little. There we go. You can see we're coming down and we're forming this kind of bearish scooping structure. These are small continuation patterns, within the one leg. So seeing that, we might have been able to bail on the trade early. But if we were expecting the M, our neckline for the M, right here on the 800, and then our halfway through here. So we came up, we failed, we were wicking high, but we never got up high. Wicked high one last time, and it always does one last time before it reverses and turns around. Let's say we got in here, maybe you got in really early, probably not. Came down halfway, all right, so that would have been our good, this would have been like super early entry. You've been kind of gambling here. This would have been our early entry, typical early entry about halfway through, because now we're anticipating lower prices. And the break of the neckline here at the 800, right here on price, that would have been our pattern confirmation entry. And that, you're a little safer with the pattern that way. Your entry is not as good. And so you got to be a little more careful with your stop losses when you do that. Your stop loss for an entry here, you want it back over here, maybe back up over the, you have to keep it over the 50 pretty well, because as you can see, if, well, no, because we broke on this side, not this side. Broke on this side, so if you came in on this side, we never broke back over the 50, we just continued down. So entry in here would have been good. The stop loss would have been there. If you entered early, your stop loss would be over the previous high. So your stop loss is a little further up. It just depends on when you catch it and how confident you are in that motion. Some of them look good. Some of them look a lot better than others. This one is a little sketch. And on this time frame, now we zoom out and I'll bet he looks better. But on this hourly time frame, we really didn't have three good rises. We had some pretty weak retraces off these rises, and so I didn't trust this as a single rise. This very well could have been a continuation, but I'm going to zoom out later and we'll see why it's important to look at it on different time frames. You can't just look on one to get the trend and the pattern down. It is important to look on multiple. So we entered our short there. Well, what if we didn't? What if we missed that, right? And we're expecting a few more legs down, because typically there are three waves down with three good retracements. So we had one here and came back down. And we had another one here and we've come back down. Now this could be a bottom before we come back up. So let me clean that a little bit. This could be a W forming here. So how do we know where to get in on the way down, where to get on the way up? So we have ways to determine our structure. Let me grab my brush, sorry. And we came down, so we formed a low, and then we came up and we formed a high, right? And we traded it within this range. Now, if we were to break on the way back down, we formed our high, and if we were to break back up and over this, that would have invalidated that, would have created a new high. But we didn't do that, we came down. And our entry for coming down, if we were expecting continuation, could have been halfway, which would have been the middle line here. And you can see the resistance here, especially right on that end. So once we broke this resistance, that early entry there, we came down, we wicked, came back up, started to come back down. But this would have been pattern confirmation. Even though we wicked and came back up a little bit, pattern confirmation, stop loss would be there. Here, early entry, your stop loss would be up here, probably over that 50 EMA, because that's going to offer some pretty good resistance. The 200 to offer even better, but you're putting more of your capital at risk. So that's a personal choice. How much of a stop you can handle, and a lot of it has to do with the size of your trade, the amount of leverage you're using as well. Anyway, this came back down, came back up. We kind of tested this neckline a little bit. In fact, we broke over it just a little bit, but we're safe still in our stop loss, even if we have it pretty tight. We form another wave, another continuation wave here with another halfway point, and breaking down here, I mean, that'd be a good spot for a take profit, partial take profit, because we don't know how many of these we're going to get. Typically 3, you know, but you got to count the 3. We don't know where this one's going to end or where it's going to go. Anyway, it stopped here, came back up, it's coming back down. Now, if we were expecting this to become a reversal, and it very well may, let's go ahead and trap our reversal as well. So we don't have it yet, but we've got a low end right here. So we got that capped, and we got a top end right here, and we have that capped. So we come down, come up, and yeah, we came down over here closer, but it still works the same. Came up, we've come down halfway. We want to double bottom before we enter a trade, unless we're expecting down, in which case, if we break below there, I would say, let me clean this up a little, we'll zoom out. I'll show you some of that resistance we want to break under if we were expecting this to continue down. Right in there, you see where these candles are stopping? If we come back down and start to break under that, or yeah, we come down and start to break under that, that'd be a good confirmation. And we may head back down. Honestly, I am expecting another bottom end somewhere in here and it to turn back around, and that this will break the neckline, or at least come back up halfway, which if it does, I could get my early entry in there. I get the pattern confirmation there, and maybe we come up and hit this 200 EMA. It may not go any higher than that. In fact, we may, this EMA is 50, may come cross over, and we may stop out here and roll back down. We might just be looking a little extra sideways before we continue. But if I got in here or here for an up, I could put a take profit here, which would cover my stop loss if it gets hit. I could put another take profit there, and we'll have this 800 EMA start to curl down a little bit more, and we could do a final take profit there, or be mostly out of our trade, 75% or greater at this 800 EMA. And then we could leave the rest of it to continue on if we expected it to continue to go higher. If it does look like it's going to turn around, cut the trade and take your profits. There's nothing wrong with making a little money. So those are the patterns we trade, and we can trade these just using our EMAs. We don't need any fancier indicators other than it is handy to check your RSI. See how oversold you are, and see if you're forming divergences. So here, where we were, and one of the reasons I'm thinking we may be facing a little bit of a cool-off down here is we are having lower prices with higher lows on the RSI. That is bullish divergence just on the 1 hour. So it's not enough for me to think the price is going to fly off the handle and crazy pump. But it is enough for me to think that it might come up here to these 2 EMAs before continuing back down. So let's see if we can find a W, and we've got one over here, because I want to play the bullish scenario as well. Clear all that up. Take my brush off, move over here. This is kind of a sloppy W, but it was a sloppy W in all the time frames, and it still played out. And I call it a sloppy W because we got a really low low here, and then our second low didn't quite come down to it. It's kind of a slanted bottom, but we still came down, formed a low, formed a high. In fact, we formed this one first, but we never got over that one, this high, until way later. We formed a little one here, which warranted us a little, but that one definitely wasn't quite enough low. I'd say at this low, we're just playing with the idea of it being enough, and then we kind of have this channel we formed in, and we break the high, come back, test the midline, because it likes to do that. And our midline is probably right in here. I would say at this swing failure pattern right here. So come up, come down to try and test some of that midline. Mostly just test this slanted support line that we had formed, and then we continue up. And we form a little M, come down, come back up, form another M, come back down, form a continuation wave here, come down a little more, another continuation wave. This is a tiny little M. M's are better at reversal. We're already at the bottom, so it doesn't really play out well there. For me, these are just sloppy continuation waves. They're not really M patterns, they're already at the bottom. But we did form, clean it up again. Sorry for the mess. We did form right in here before heading up. If you zoom in, and it's hard to see on the 1 hour, but say we're moving in this little area here, and we move into the 15 to look for hints, which I completely lost that area. Here we are. Yeah. What do we have? Right in there. You can see it on the 15 pretty easy. Actually, it's this. It's not even just this one. This is a small W that you could have played into this larger W here. Right? And that was a big enough W reversal pattern, continuation waves up to the top of that. Oh, I almost forgot. Previously, I talked about that M and how if you zoomed out, you would see it easier. So let's go into the 4 hour chart and take a look at it a little farther away. Here it is. So we were looking at this area right here. That's what we were looking at originally. Now if we add the rest of this in, we have a big bottom area here, and we formed a M pattern there, came down, formed a W, came back up, formed another M, came back down. We just broke our neckline here not long ago, in fact, with this continuation wave. So this is testing that neckline. I don't know if I would expect a reversal at this point, right? So looking at the higher time frame, we may not get, and we can go up to these EMAs and we can test that pattern, and then what do we have? We have a large continuation wave, and that's a possibility. But we may get hemmed up here. Let me use a cleaner tool on this. You guys deserve it. We may get hemmed up here on this neckline, and that may be as far up as we go. At that point, we could expect that in maybe to come down to our previous lows. What were they at? Let's take a look at, we may be coming down into this area. Right here, or possibly right here. I still think we'll come back and take that wick. Wicks like to get taken. They just do. Maybe we'll form a little continuation wave, come down, take that wick out, and start to roll back up. And that'd be nice, because then if you zoom out even more, let's take a look at what it looks like on the daily. I don't trade H-bar, so I don't know what it looks like. It's not really a W. In fact, oh boy. All right, so zooming out, we may be in a little bit of dire straits on this pattern. Let me go back into that daily. We look down. What are we forming here, right? Let's hope that's a continuation wave, and it's possible. So, let me path out, right? We could be coming up, down, and we haven't hit the bottom to invalidate yet. We could be looking at another continuation up if we gain some traction here. And maybe it's just got a double bottom, make a little W here for this larger wave to continue. And that could be a possibility. But what we're in danger of, if this starts to get really bearish, is that's a terrible M. But one top, two tops. If we break this line here on the way down, we could be looking at a disgusting M pattern there that could really bring the price of H-bar down. I think this is H-bar. Hedera hash graph. Pretty sure it's H-bar. Anyway, I just grabbed one. I don't actually trade this one. Nothing against it. It's just not. I only trade what I'm used to and what I'm familiar with. I'm not very familiar with what this is, but the patterns should all work the same. So, what can we do to help out with this? So this is just pattern trading. We're not using any of the other indicators that we have developed in the other videos as Confluence. So that's just pattern trading with the EMAs. Oh, and why I put the 5 in here. I know some of you guys are wondering that. The 5 is for coming in and for making these decisions on direction of and the volatility of direction. So let me get out my brush again and we'll show you. So right here, we come down and we come back up, but you see the 5 and the 13 are starting to spread out, and they don't cross back over. If they cross back over, I'd be a little more bullish on this move, but they kind of reject each other, and then they spread out again. And the more they spread out, the more momentum this move has got. Now, it starts to wick low, and these low wicks, without gaining any ground, price stays here, but the wicks travel into another area. And that tells me that price is rejecting the lower end of the spectrum, and it wants to turn back up. That's a hint. It's not a fail-safe guarantee, but it's a good hint. You see, like this wick here, and we came back down, but first, after these 2 wicks, came back up a little, wicked up here, and price just went bonkers. But we're wicking a lot more low in this area than we are high. We're not really gaining any ground. Just a few candles there. I'm trying to find other places where that telltale sign is, because it's not always as apparent. You can see these wicks up the top, kind of trying to wick into a new zone where price just kind of stays below this level, doesn't want to move up. That's how you get those Bart Simpson patterns. And there's usually a dip in the middle to form a nice M for a good reversal. So that's just something to look for while you're doing your patterns. And you want to also pay attention to your EMAs, see where they are. See, we came back up, and we failed to break that 50. We wicked above it a few times, and what did we do? We formed an M. Looks like we're coming back down. Yeah, and this is our daily, so it's like, where were we before? That was a whole different chart. It was an hourly chart. That's a whole different chart. Anyway, let's do, before I draw all over it, let's do a monthly real quick. I want to grab some levels. We're going to see if there are any good levels to trade on this, because we can trade levels too without trading patterns. It's also possible. But if you combine the two, you just make it that much stronger. So let's start with this good monthly there. Our monthlies are purple. Clone it, and we'll put the other one here. And I don't think the other one at the top is really going to come into play right now. Just considering where we're at. This is monthly charts. Let's go down to the weekly. Right. I did miss one monthly. That's all right. We'll work what we got here. So that's a good one right there. That's a really good one. We'll turn that to our weekly color, which is this. I don't like the gray. I'm going to go white. It's a little more visible. I need it to be a little more visible. Because vision's not what it used to be. I feel like that's a good one too. So we'll mark that one up. And then let's do one up higher just because. Let's do 2 up higher. So I like that one too. I don't know why, I just like that one. All right. So we go into our daily. Right here. And we clone that. And let's bring a good daily. Where's a good daily? Let's do this upper one here. And let's change it to orange, which is our daily color. And we'll clone it too. And let's do a lower one there. And I want to do one more daily down here where I see some good levels of support. And obviously that's not all of them, but this is plenty for what we're going to be using them for. And one last thing I want to look at is a good Fib retracement. Let's try a really high term, not really high, but a fairly high term time frame Fib. None of these are really going to play in, and I'll go over my Fib levels in a minute. Mine are a little different. I've added the 650 and the 0.35, and that's 2 golden pockets. So you got the 2/3. I got my pen and show you what I'm talking about. Let me spread this out a little. So in my Fib settings, close that down. I've gotten, I've grayed out most of the fibs I don't use as much. The 0, the 1, the 5, the 236, and the 786. And sometimes I'll even take those out completely. What I did was I made the 382 and the 618 yellow, and then I added, and I don't know why this one's not orange, but I added the 0.35 and the 0.65. Now the 618 and the 65 create what's known as the golden pocket. That is a strong fib. If you're coming from down to up, that's 2/3 of the way up. If you're coming from up to down, it's about 1/3 down. It's not exactly, but it's kind of in that area. So that's your golden pocket. Well, the opposite end of the golden pocket, the exact same distance from the 0.5 fib, which is 50%, from the high to the low, is the 0.382. And so I added the 350 because it's also the same distance from 0.382 that 618 is to 65. And this creates your golden armpit, which is essentially the same as the golden pocket, just the opposite direction of the 0.5 EMA. So we got our golden pocket and our golden armpit. And neither of those are going to come into play anytime soon. So I'm going to get rid of this retracement. Let's go a little more local. And let's start from, we'll go from high to low here. Yeah, I think that one's going to play a little better. So let's leave that one in. Let's zoom in to where the action is here. All right, I'm going to mark in a rectangle. I'm going to look for swing failure and swing support since the 0.5 fib in the weekly zone here. This is a big swing failure area. You can see we've tested this area several times and we have failed to break through. And then I want to do one, not you, let's put you back. I want to do another one of these rectangles, only I think I want to do it down here. This looks like another good swing failure zone. And let me look back and see if that is the case, historically speaking. And I'm going to say yes. We have had a couple of other traipses in there. It's not a very strong one, though. In fact, if anything, I like this one better, and we've already broken through the bottom of it. So we're going to have to look and see where our next time frame swing failure area is going to be. And honestly, this one here is not a very strong one. We don't have a lot of swing failure there. We have a little bit here. I would put it lower. This box might be down here where we've hit here, and that little upper wick there. And we have broken below, and yeah, we failed. Come back up here a little bit. We broke below, tested it, failed, broke up, and back out again. So I'm going to do that one. It's not as strong, but maybe it'll be stronger in the future. So let's go ahead and we'll just mark it down. I'm just going to drag it over there so I know why I went that far over and with the size of the box that I did. So now that we've got that in there, and you can mark the upper one there too. I think on the, if you were doing a really tight time frame, you could mark the 382, 350. But if I were expecting price to go up, I would also mark the 650 and 618 up here, especially since, like, if it came up right now, you'd be battling through this EMA, which is, if we're starting to come up, it's going to come up too. We'll be right in that box. And this will slow down right in this area here where I would draw my other upper box. We'd have to fight that daily 200. These daily EMAs, they're pretty tough stuff, so I may not break those. So anyway, let's clear that out. Now let's go into our 1 hour time frame. See if this does anything for us in terms of trade confirmation. So, man, look at it. All right. So now we are coming into this W. It's going to be short-lived, I think, because we're coming into this zone, this swing failure zone of resistance. We got to break that 50. We got to break this daily. We got to break this daily, and we got to break the 200. And that's going to require a lot of oomph. And I'm not saying it can't do it, but I have a feeling that the easier play here would be a continuation wave and not a reversal at this point. Now you can play the back end of this wave up until it ends, but it looks like we've already gained a lot of that ground. I don't know if I'd do it, especially since we're hovering right now just below that line of resistance. So let's see if that comes down. That would be my play, is we've hit the 50 and we got rejected just like we did here. We may form a little M pattern. That'd be something to look out for in a smaller time frame. And I can zoom in there too. Let's take a look at the 15. I don't think it's going to tell us much different. I can kind of see one maybe, but he's not very big. And I think what we're going to end up with one forming. Now this looks like it could be a W, and that may play out. But again, it's not very large, and it's pretty far away from the left side. This whole area here could be the W, and that's kind of what I was looking at. But the more I'm looking at it here, the more I'm thinking that we're going to come up, fail again. Maybe here, maybe up at that 200. Maybe it'll cross down. Maybe it'll take its time, come up here, fail again, make an M pattern, and that'll give it the momentum to continue down, to continue our wave pattern. So that's how we use these support and resistance lines to help us out with these pattern trades. Because now we know if we are going to come down, well, this would be a good area for a take profit. We've got another one here at the monthly, be a really good area for take profit. And then I'd be out, probably at least mostly out by that box, because that's our swing failure box. And if we fail there, we're going to form a very large double bottom on the daily, and that could be our ticket out of here. So I hope this helped explain some more on the indicators and for the pattern trades. Now, if we take these EMAs out of here and we just do channel trades, and we're going to remove the volume too and our EMA. All we have right now is price. And when we do that, I like to move to if you're just going to channel trade, try out the Heiken Ashton candles. So they change the candles to where they move on the trend and not just the candle close. So one bearish candle close does not make for a red candle. It requires some price action to turn them red to green, green to red. And this kind of lets you know the price trend. And you can kind of see it green on the way up, red on the way down. It takes a little of that confusion out, so not bad to do while you're just looking for momentum and direction of the trade. We are going to keep our RSI, and I don't know why. It's because I have so many different indicators bundled in with it that I'm not actually changing my RSI. But let's see if I can move that, make it a little bigger. That's not helping at all. Anyway, yeah, it's good. It's because I have several other indicators I don't want to take off of there because I've had them customized, and I'm going to make them visible again and move the RSI back into its own field later after I'm done with this video. I don't just trade off the RSI. I use a couple of other indicators, but they're not available in the free version, so I'll go over those later. I'm just sticking with the free version stuff for now. And yeah, so if we were channel trading, we would mostly be doing it between this range, and we'd be going back and forth and up and down, and it may break back into this range and continue up. But since we're under it now, look for failure here and look for shorts. If it comes back up and starts testing it and holds it, or it breaks up with momentum, maybe crosses over this daily, then you want to start looking for longs back into this swing failure zone area here. And it can really be as simple as that. That's really trading the levels for me. And I used to do this exclusively before I started adding patterns. And it works pretty well. It's super simple. Like, this is super simple because you're not going to make every trade, but because you have these boxes, like I know if we come down here and we start to come up, we're breaking out of this area, or even here if we broke up out of the area. If I took a long, my stop loss would be down here. And yeah, sometimes it comes down, hits it, but it'll come back up. You can enter again, try it again. And it's going to win more, especially, that distance is a lot greater than this one. You're going to win more than you're going to lose doing this. Lose a little here, lose a little there. sorry, down here. But these percentage moves are pretty good. And as long as you're disciplined and the amount that you trade and leverage that you trade, you know, you're taking these, what are these? Longs are 13%. So if you're doing 10x longs in these channels, and this is a 15-minute chart, you know, if I come in the hourly, I'll show you how many hours we have in between there. You know, this is less than a day. So in less than a day, 13%. If you're trading with 10x leverage and you're just doing the tops and the bottoms of this, 13% is a 130% move, you know, in a day. And you're probably doing multiples of these a week. That adds up substantially. So it's a good way to start, and it's a great way to practice trade until you can get your TEA a little more substantiated. We'll go over volume again later. I have a video on that as well, and my simple trading strategies. So be sure to check that one out. We go over a lot of this stuff too. I just wanted to kind of break them down on their own a little bit more, explain them maybe a little bit better, and use your EMAs. You can combine your EMAs as additional support and resistance levels, and you can also use them for additional directional confirmation. They also work just fine with the Heikin-Ashi candles. I'm not crazy about them, but you know, I've used them, and some people absolutely love them. Me, I actually just prefer the messy candles that give me the more accurate information, and because I actually use that information. Not everybody does. So if you find that you don't need the messy candles, go with the Heikin-Ashis. I mean, they're a lot neater, and they do simplify the direction of the movement. And sometimes, you know, hey, simpler is better. It really can be. But combine the levels with the EMAs and then use those to help you trade patterns. You can see these M's up here forming, right? And we were forming them at where pattern, at swing reversal areas. So we mark off our swing failure zones, and man, we've got some good confirmation there. These have been fairly confident trades right here in that area. And if we come back in, we may have a few more confident trades in that area. If we fall below, you know, we may have some confident trades in this area too. We didn't get a lot here, so this range isn't that well tested, and it's making me think that we are going to come back down and test this range more. There's more orders to be filled in here. They're going to want to sweep that zone and bleed it for more money before they move to the next zone. Maybe up, maybe down, but it doesn't really matter. We can trade both ways. I'll be happy to take whatever profits I can take in either direction. All right, I'm going to wrap this up. You guys have a good night or a good day whenever you're watching this, and happy trading.